Why the ultra-rich are hoarding crypto and gold, not dollars. The ultra-rich have always moved differently. When the masses rush toward one thing, stocks, bonds, or cash, the elite quietly pivot somewhere else, somewhere harder to follow. Today, that somewhere is crypto and gold. The average person might think this is all about diversification, but in reality, it's far deeper. The world's wealthiest families, hedge funds, and old money dynasties aren't chasing returns, they're preparing for a reset. The global monetary system as we know it is losing trust, and the ultra-rich know that when trust dies, paper money follows. They've seen it happen before. From the Roman denarius to the German mark, from the Argentine peso to the Zimbabwe dollar, every fiat currency eventually implodes. And while ordinary people are taught to save dollars, the elite are hoarding assets that can't be printed. The irony is striking. The US dollar, once the world's reserve currency backed by gold, is now a digital promise backed by nothing but faith in government debt. Trillions printed, trillions owed, and yet people still believe that green paper will hold value forever. The ultra-rich don't. They've watched what central banks have done since 2008, quantitative easing, zero interest rates, and now, stealth inflation disguised as economic growth. They understand that every new dollar printed devalues the old ones. Every stimulus check, every bailout, every emergency fund is a silent tax on savers. And when you have hundreds of millions, or billions, to protect, you don't wait for CNN to tell you it's time to move. You move before the storm. Crypto and gold are the escape hatches. Gold is ancient money, the eternal store of value. It survived empires, wars, and collapses. Crypto, specifically Bitcoin and its blockchain offspring, is digital gold, decentralized, borderless, and beyond the reach of any single government. The ultra-rich are hoarding both because they understand cycles. They know we're approaching the end of one, the debt cycle that began after World War II and accelerated after the 1971 Nixon shock, when the dollar was detached from gold. Since then, the system has been a high-speed train running on pure debt. Every crash demands more money printing to keep the illusion alive. Now, with over $300 trillion in global debt, that train is running out of track. The rich don't believe in the dollar anymore, they use it. They use it as a medium of exchange, but not as a store of wealth. Their real storage is elsewhere. They own land, rare art, companies, and now, increasingly, Bitcoin, Ethereum, and tokenized assets. You'll notice something: whenever the Federal Reserve prints, the rich don't panic, they buy. They buy scarce things. The poor buy liabilities, the rich buy scarcity. Scarcity is the only true wealth. Gold is scarce. Bitcoin is finite. Dollars are infinite. There's another reason the wealthy are moving toward these assets: control. The old financial system gave governments and banks enormous power. They could freeze accounts, seize assets, and inflate away savings. The new system, crypto, is opt-out. It's a silent rebellion in code form. Bitcoin doesn't care about your passport, your politics, or your credit score. It recognizes private keys, not titles. That's why billionaires who once mocked it now hoard it quietly. Elon Musk, Michael Saylor, and hedge fund managers like Paul Tudor Jones and Stanley Druckenmiller have all made moves into Bitcoin. Central banks themselves, ironically, are buying gold at the fastest pace since the 1960s. In 2023 alone, they added over 1,000 tons to their reserves. Why? Because they know fiat is ending. The most powerful indicator isn't what the media says, it's what the elite do. Publicly, they reassure the population: the economy is strong, inflation is transitory, your savings are safe. Privately, they're converting their paper wealth into physical and digital stores of value. It's the same playbook as before every major shift. Before the Great Depression, insiders pulled their money from stocks while the average citizen kept buying the dip. Before the 2008 collapse, insiders shorted the housing market. And now, before the currency crisis, they're loading up on crypto and gold. History doesn't repeat, It rhymes, and the rhyme is loud. There's a myth that gold is outdated and crypto is too volatile. But volatility doesn't scare the wealthy, it attracts them. Volatility means opportunity. When Bitcoin drops 50%, the average person panics. The ultra-rich see a discount on digital real estate. They're not gamblers, they're long-term players. They understand that Bitcoin's volatility is front-loaded. Its limited supply means that, over time, it becomes less reactive and more stable as adoption grows. In contrast, the dollar's stability is an illusion. It's guaranteed to lose purchasing power, quietly, consistently, and permanently. The Federal Reserve aims for 2% inflation per year, but compounding means that's a 50% loss of value every 35 years. For someone with generational wealth, that's unacceptable. The ultra-rich think in centuries, not quarters. When you've already won the game of more, your only goal becomes keeping. And keeping wealth in dollars is like storing water in a sieve. Inflation, taxes, and political manipulation slowly drain it. Crypto and gold are like vaults, one buried in the earth, one buried in the blockchain. Both are resistant to dilution. Both exist outside the system. And both represent freedom. The irony is that the same elite who once controlled the monetary system are now seeking freedom from it. The modern elite aren't just old money families anymore, they're tech billionaires, global investors, and even politicians hedging their own rules. They've watched governments weaponize the financial system, freezing accounts of dissidents and sanctioning entire nations. They know that as the world moves toward digital central bank currencies, CBDCs, privacy will vanish. Every transaction will be tracked, every account programmable. That's not wealth, it's permission. And billionaires don't ask for permission. So they're building exits, vaults of code, private wallets, decentralized protocols. They'll comply publicly, but privately, they're stacking coins and metal. This quiet accumulation is also psychological. Gold and Bitcoin give a sense of sovereignty, of control. The ultra-rich don't trust institutions, they own them, but even they know ownership isn't safety anymore. When confidence breaks, even the powerful scramble for shelter. The US debt ceiling debacle, banking collapses like Silicon Valley Bank, and global de-dollarization movements are signals that the old order is wobbling. The world is shifting toward a multipolar system. China, Russia, and BRICS nations are trading in local currencies and buying gold to back them. The West, meanwhile, prints and prays. The elite are reading the writing on the wall, the dollar's dominance is fading, and with it, the illusion of control. For them, crypto isn't just profit, it's escape velocity. It's a hedge against surveillance, inflation, and collapse. Imagine holding wealth that no government can devalue or confiscate with a keystroke. That's what crypto represents. It's digital sovereignty. And for gold, it's timeless power, accepted in every era, in every corner of the planet. In ancient Egypt, a single gold coin could buy a fine garment. Today, it still can. That's stability. No fiat currency in history has survived a few centuries. Gold has survived thousands of years. Bitcoin, now entering its adolescence, is proving to be digital gold 2.0. The ultra-rich are often mocked for their secrecy, but secrecy is survival. When the financial system becomes unstable, you don't broadcast your exit, you quietly build the lifeboat. Most of the real crypto wealth today isn't sitting on exchanges, it's in cold storage, spread across multi-sig wallets, trusts, and foundations. It's the digital equivalent of Swiss vaults. And just like gold bars stacked in hidden bunkers, these crypto reserves are invisible to ordinary eyes. You'll never see them flaunted on Twitter or in interviews, they move in silence, preparing for a future where the rules change. The irony is that this move toward hard assets is creating a self-fulfilling prophecy. As the elite buy more gold and crypto, they reduce the circulating supply, driving up scarcity and, eventually, price. The average person, meanwhile, stays trapped in the system, earning in dollars, saving in dollars, and watching their purchasing power erode. It's not that the rich have better information, they simply listen to different teachers. They study cycles, history, and macro trends. The average person studies TikTok and trusts statements. The game was never fair. But understanding it gives you a chance to play differently. The next major wealth transfer won't be about who earns more, it'll be about who owns real value when the paper burns. The ultra-rich know that fiat money dies in waves. First slowly, through inflation. Then suddenly, through confidence collapse. When that happens, gold and crypto won't just be investments, they'll be lifelines. The 1% aren't predicting apocalypse, they're hedging against it. To them, this isn't paranoia, it's protocol. When you manage multi-generational capital, you prepare for the unthinkable. Even the architecture of wealth is changing. Tokenized assets, on-chain real estate, and digital commodities are becoming the new frontier. Gold can now be traded in fractional form, represented by verified blockchain tokens. Bitcoin custody services are being built for family offices. Private banks in Switzerland now offer crypto vaulting as a premium service. This isn't rebellion, it's evolution. The elite don't fight the system, they build a new one under it. Meanwhile, the Federal Reserve continues its balancing act, tightening, loosening, printing, and pausing, all to sustain an economy built on debt and confidence. But confidence is fragile. Once people realize that the full faith and credit of the United States is really full faith in more printing, the game ends. The rich aren't waiting for that headline. They're already out. They're diversifying into private equity backed by Bitcoin treasuries, investing in mining operations, and buying gold not for trade, but for transmission. To pass it on, quietly, like the ancient families of Venice and Florence once did, through vaults and generations. And there's a spiritual layer to all of this. Gold and Bitcoin represent energy in pure form, stored labor, effort, and belief. Dollars represent promises. The rich are trading promises for energy. They're returning to assets that hold intrinsic power. You can feel the symbolism, metal born of the earth, code born of math. Both transcend borders, languages, and governments. Both represent the ultimate expression of sovereignty. We're watching the dawn of a new monetary religion. Fiat is the old faith, propped up by authority. Gold and crypto are the new temples, backed by truth, scarcity, and mathematics. The elite are its first priests. And just as they once held gold when nations fell, they'll now hold private keys when banks fail. To the masses, this will look like luck or conspiracy. But it's simply foresight. The rules never changed, the players did. The psychology behind why the ultra-rich are hoarding crypto and gold goes even deeper than fear or foresight. It's about positioning themselves on the winning side of history's inevitable transformation. Every few centuries, humanity redefines what money is. Once it was shells, then metal, then paper, and now, data. Each shift births new empires and destroys old ones. The elites understand this better than anyone, because they are the architects of empires. They know that money isn't just an economic tool, it's a power signal. Whoever controls the money supply controls civilization. But the current system, fiat-backed by nothing but political promises, is crumbling under its own contradictions. And so, they're pivoting toward the next architecture of power, decentralized, digital, and scarce. Look closer and you'll notice patterns in their behavior. They're not making flashy public trades. They're setting up private trusts, offshore vaults, and crypto custody agreements through family offices. They don't buy Bitcoin the way the average retail investor does, they acquire it in chunks, through over-the-counter, OTC, deals worth tens or hundreds of millions, invisible to public exchanges. These silent transactions are the quiet rumblings beneath the financial earth. Every Bitcoin withdrawn from an exchange and moved into cold storage is one less piece of digital real estate available to the masses. The supply is shrinking, but demand, especially institutional demand, is multiplying. Meanwhile, gold is being scooped up not for jewelry or speculation, but for insurance. Sovereign wealth funds, from Singapore to Saudi Arabia, are increasing their reserves. They know gold isn't just a metal, it's political leverage. In a multipolar world, gold-backed assets will become the neutral ground for trade. Nations may disagree on ideology, but they all agree on the weight of gold. It's the universal language of value. And crypto, especially Bitcoin, is its digital twin. Both appeal to the elite not because they're fashionable, but because they transcend borders, censorship, and debt traps. The rich don't want to depend on anyone's promise to honor paper anymore. They've watched central banks weaponize currencies and governments weaponize banking systems. When Canada froze accounts of protesters, when Russia was cut off from SWIFT, when inflation ravaged Argentina, all of these were case studies for the global elite. They learned a critical lesson: your assets aren't truly yours if they exist inside a system controlled by someone else. So they're opting out. They're building parallel systems, offshore, on-chain, and off-grid if necessary. For the ultra-rich, crypto isn't about rebellion, it's about insulation. They aren't looking to overthrow the system, they're building firewalls around themselves while it burns. Think of it like this: the average person hopes the government fixes inflation. The ultra-rich hedge against it. The average person panics about bank runs. The ultra-rich own the hard assets that survive them. They don't predict the collapse, they price it in. And this wealth migration isn't confined to the West. In Asia, billionaires in Hong Kong, Singapore, and Dubai are storing unprecedented amounts of physical gold, as well as allocating capital into tokenized commodities. In the Middle East, oil families are quietly converting petrodollars into crypto treasuries through discreet intermediaries. In Europe, aristocratic families, some tracing their lineage to royal bankers, are moving their assets into Swiss crypto vaults, hedging against EU instability. They all understand one universal rule: money flows towards sovereignty. Even tech titans, who built their empires on centralized platforms, are pivoting. They've seen what happens when governments demand data, freeze accounts, or impose fines. They're buying Bitcoin for the same reason they buy private islands: control. When you hold your own keys, you hold your destiny. Bitcoin is the only asset in history that can be transported across borders in your mind, 12 words memorized, untouchable by customs or confiscation. Gold requires vaults, Bitcoin requires belief. Both, however, require foresight. And foresight is what separates the ultra-rich from everyone else. They don't follow trends, they anticipate outcomes. They see inflation not as a temporary inconvenience, but as a systemic feature of fiat survival. They see central bank digital currencies, CBDCs, not as progress, but as digital pages. While the public celebrates the idea of fast, convenient payments, the elite see programmable control. Imagine a world where your money expires, where spending on certain items can be restricted, where every transaction feeds into a social credit profile. The ultra-rich know this isn't science fiction, it's beta testing. So, while the masses adopt CBDCs for convenience, the elite will operate from parallel financial ecosystems, gold-backed tokens, decentralized protocols, and multi-jurisdictional asset networks. There's a philosophical layer here, too. Gold and Bitcoin share a moral code: honest money. They can't be faked, inflated, or easily manipulated. That's why they attract those who've seen behind the curtain. To the ultra-rich, the dollar has become a tool of illusion, a promise that everything is fine while the foundation decays. Gold and crypto, in contrast, represent transparency. Bitcoin's supply is visible to everyone, gold's weight is verifiable by anyone. In a world drowning in debt, truth becomes the ultimate luxury. The elites also understand narrative warfare. They know that to accumulate quietly, they must distract loudly. That's why mainstream media cycles between Bitcoin is dead and gold is obsolete headlines every few months. It's misdirection. The more the public doubts, the longer the rich can accumulate without competition. Only when their positions are full will the narrative flip, and suddenly, Bitcoin will be the new gold standard and gold will be backed by blockchain innovation. That's how every cycle plays out. The rich accumulate in silence, the public piles in at the top. We're entering an era where who you bank with will matter less than what you bank in. The ultra-rich already understand this. They're turning assets into energy, and energy into freedom. Gold is the tangible anchor, crypto is the technological wings. Together, they form a barbell strategy for the new age, rooted in ancient stability, propelled by digital evolution. But make no mistake, this accumulation isn't altruistic. It's strategic dominance. When fiat collapses, those holding gold and crypto will be the new lenders of last resort. They'll have leverage over governments desperate to stabilize currencies. They'll dictate terms in gold and Bitcoin while the rest scramble for survival. It's not a conspiracy, it's the oldest play in the book. Those who own the money after collapse write the rules after recovery. Even now, crypto adoption among the world's wealthy is reshaping philanthropy, politics, and power. Crypto-backed donations fund think tanks, lobbying groups, and political candidates. Tokenized gold is being used to settle private trades between nations outside of the US dollar system. Quietly, a shadow economy is forming, one that respects math, metal, and code over promises. And when the next crisis hits, whether financial, geopolitical, or technological, it will be this network of crypto and gold-backed capital that holds stability while everything else burns. For the average observer, this might sound distant or dramatic. But think about it, the last 3 years alone have proven that no institution is infallible. Banks collapsed, nations defaulted, and currencies bled value at record speed. Yet gold hit record highs, and Bitcoin rose from the ashes repeatedly. To the elite, that's not volatility, it's validation. Each crisis reaffirms their thesis: the old world is dying, and only scarce assets survive rebirth. In the end, it all circles back to one idea: control. The ultra-rich aren't hoarding crypto and gold to get richer, they're doing it to stay free. In a digitized world where surveillance masquerades as security and compliance as virtue, true wealth is autonomy. Gold gives it physical form, Bitcoin gives it digital form. And both give them what dollars no longer can: exit. When the music stops and fiat faith collapses, the ones left standing will be those who prepared, not by saving, but by converting belief into scarcity. The ultra-rich aren't betting on apocalypse. They're betting on arithmetic. They know that history favors the scarce, not the infinite. Empires that print collapse. Civilizations that hoard endure. And when the smoke clears, the next system, whatever form it takes, will once again be built around something timeless: trust, scarcity, and truth. The ultra-rich are just getting there first.